FutureTrend channel is glad to welcome all of our subscribers, and for the date of 29 of October we are ready to start to present our material regarding analysis of commodity currencies. And today we'd like to concentrate your attention on these types of currencies because as regarding the major currencies, here the situation still remains quite unpredictable from our point of view. For the last time, it's really very hard to trade major currencies because they continue to trade not so abnormal. Probably for sure there are some kind of trends, and the major trend is dollar strength, which is for example the dollar index that measuring the dollar against six major currencies is trading above 96, kind of pivotal level, and from that point of view that should pave the way for another extension higher for the United States currency. Anyway, we should be cautious regarding the future prospects of a rising United States dollar, taking into account first of all the stock market. And the stock market at the moment is looking really very heavy and really very fragile, because it's probably ripe for another extension to the downside, because first of all rising borrowing costs in the United States, also geopolitical tensions, also falling corporate earnings. All in all, for sure that should impact the price of the United States currency as well. So let's see how the market will evolve during this week, because today is Monday and it's really very hard to say where the market will really go. And why we'd like to concentrate your attention on the commodity block of currencies, not because of the fact that probably here at the moment we have our main positions, but also there are some kind of interesting facts and developments in the technical analysis of these currencies. Let's see, for example, the Australian dollar. The Australian dollar, which is as you could see during previous trading session on Friday, fell to the level of 0.7020, 20 pips away from its psychological important barrier of 0.70. Anyway, a strong rebound from that level, despite of better economic results regarding United States advanced gross domestic product data. As you know, on Friday it came at 3.5%, 0.2% higher than the market was expected. And from that point of view, this reaction back to the upside could pave the way for better, let's say, for better week, trading week for the Australian dollar. For sure, from the point of view of technicals, we should break the level of 0.78, 7180, where lies a current downtrend line of Aussie, the downtrend line of 2018. Of course, from the point of view of medium to longer term prospects, the pair should remain under downside pressure while trading below the level of 75, which is present at the moment really a very tough point to break, taking into account not only technical kind of barriers, but also the location of moving average 200 daily line at 75.02. Probably only break above that level could improve the bullish prospects for the Australian dollar. At the moment, the Australian dollar continue to look really very heavy and very negative, taking into account, of course, the problems associated with Chinese economy, trading relations, very hard trading relations between United States and China. All in all, here, of course, medium to longer term prospects remain quite negative for the Aussie dollar. As regards the Kiwi dollar, the same. After a reaction to the lows of 74.75 or so, the pair is back around one figure to the upside. Here, as you could see, also lies a kind of 2018 downtrend, but for the last time, a lot of times we broke this level to the upside, but without any kind of further extension. So from this point of view, we should be cautious regarding over optimism regarding the bullish positions in the Kiwi dollar. We still miss our longer trade opportunities in the Kiwi dollar. We are ready to buy it at 64.20 with a stop below 64.20, but 64.50 per 64.20. And as regarding dollar Canada, as you could see, we went out from our short trade recommendation during previous trading week, and of course probably it's time to stay a little bit outside the market, because as you could see, there is a kind of immediate kind of short-term uptrend which lies around a psychologically important level of 130, and while above that level the dollar Canada should remain buoyant in the short-term period of time. As regarding dollar ruble, despite of Central Bank of Russia interest rate decision on Friday, it was more or less a non-event. The moment the pair continues to trade more or less encouraging. I mean, the Russian ruble has a tendency to appreciate despite of the falling world energy prices and despite of the problems with other sectors of emerging economies. Probably Russian ruble is the main beneficiary among the emerging market currencies at the moment, and still trading above its pivotal support area located at 65. Only break to the downside below that level could really change a situation to the worse side for the dollar against the Russian ruble. As you could see here on the daily chart, it looks especially clear. While above that level, Russian ruble should remain should be traded from a long position. I mean the dollar ruble. At the moment, that's all, our dear subscribers. We wish you a pleasant start of this trading week. Take care, and tomorrow we will be back to you with our analysis of major currencies. Bye bye for now.